Well, good morning, good afternoon. Welcome to the April 10th WASDE Review webinar. I'm Greg Horstmeyer. I'm Editor-in-Chief at DTN, and I'll be your moderator today. And again, as usual, kicking us off and giving us some feedback on today's WASDE report is DTN's lead analyst, Rhett Montgomery. We're looking at the numbers that came in today. As always, this webinar is in listen-only mode, but you can ask questions. If you have questions, you should see either a question mark or a Q&A box down in your lower right-hand corner. You can click on that and it'll open up a panel that'll let you type questions in. And you can do that anytime through the webinar. As something comes up in your head, please send those questions in, and then we'll hold those until after Rhett finishes, and we'll go through questions. Again, also this webinar is being recorded, and we will have a rebroadcast link up on the DTN.com website within 2 business days. So hopefully by first of next week, you should be able to download this event if you want to re-listen to it or share it with others in your operation. And again, that's at DTN.com. With that, I will pass it over to Rhett. Rhett, there's a lot of things driving markets right now that have nothing to do with supply and demand at the moment. But so how do the numbers today fit in with everything that's going on in the world?
Yeah, absolutely. Good afternoon, everybody. Thank you, as always, for joining us for a recap of today's USDA updates. Obviously, as Greg said, a busy time in the world with a lot of outside noise influencing the markets. I think at the very least, today's numbers maybe offered some refocus to the market on what, at the end of the day, really should matter the most is the fundamentals driving these commodities. And I think that's what we're seeing in price reactions today is mainly a refocus on what's actually going on in supply and demand behind each given commodity and kind of leaving the outside noise to be what it will be at this point, given the rapid changes even into the latest hour or so. It seems there's always changes in the policies coming out. So at some point, I think like we're seeing today, these traders will go back to focusing on what's maybe a little more manageable. So with that, the USDA did give us some more changes to focus on. So we'll just go ahead and jump in to make sure we can cover everything and also allow some time for some questions. Starting with corn, USDA, after leaving the balance sheet unchanged in both the February and March editions of the WASDE report, the USDA did offer some changes this time around. Most notably, they finally acknowledged the very impressive pace of U.S. corn exports by increasing that column or that bucket by 100 million bushels. So we're now up to 2.55 billion bushels of forecasted exports for the marketing year. That was a point of frustration for many traders through the February and March reports that felt they should have acknowledged that sooner. But good to see finally some acknowledgement there from the USDA. On the other side of that, and eating into that slightly, is a reduction in feed and residual usage. Not all that surprising to see this happen, especially after the last quarterly hogs and pigs report. I don't know how many took a look at that, but it was a very surprising report that saw overall way less hogs in the U.S. than what traders had initially thought. The call was from anywhere from 1% to 2% higher on hogs across pretty much all weight classes. That report actually came in at slight reductions year over year. So, and less farrowing intentions as well. So overall, that's ate into the amount of hogs that are eating corn, which makes sense. Hogs are a large consumer of corn in the U.S. So to see those numbers reduce, it was natural to see a slight reduction then in the forecasted feed usage for corn throughout this season. So the bottom line for corn was a 75 million bushel reduction in ending stocks, back down now to under 1.5 billion bushels, to 1.465 billion bushels here for 2024-25. On the world side of the picture, the main columns most people probably scrolled right to were the Argentina and Brazil estimates, which, as you can see, the USDA left those alone. It is worth noting that Brazilian agency CONAB released their April crop report this morning, a couple hours before the USDA, and they increased their corn estimate, but it still remains below the USDA by about 2 million metric tons. They're right around the 124 or so million metric ton level, just above. So still a little bit of a gap there. But overall, given the timing of the year, April's an extremely important month for pollination in Brazil for their safrinha crop of corn. So still having that in front of us, not surprising to me to see the USDA kick that can down the road here. I'm sure they'll take a revisit of that in the May report here in a month. But overall, the bottom line to the ending stocks picture for the world was, again, another reduction in world corn ending stocks. And then, notably coming outside of China, you can see at the bottom, China's numbers were pretty much kept static in their production, and their imports, which are down year over year, but their imports are held steady report over report at 8 million metric tons. So again, we're continuing to see a tightening of the world balance sheet outside of China and outside of the U.S., which we'll talk about here momentarily. Which should be supportive of prices in the long run, especially putting some stress on Brazil and some pressure on Brazil to follow through with production here when their crop comes available here in the summer. This is what I was talking about in terms of looking at this corn situation outside of the U.S. and China. So the U.S. and China combined own, the vast majority of corn stocks in the world. So I was kind of curious the other day to just take a look at, well, what does it look like if you take those two out of the picture, especially China, where it's a closed system and you're never going to, touch that corn. They're not going to export that corn to a country in need. And I also just want to see, okay, if the world had to rely solely on Brazil's safrinha crop to supply and Argentina's crop, for a source of supply, what would the situation be like? And as you can see, we're historically tight in that regard. It goes back all the way to and I'm actually off on a year there that I'm just seeing now, so I apologize for that. That's actually 1983 to 1984, so one more year back even from the 1985. I was looking too quick when I wrote that this morning, but so you're talking way back since the relative to demand, we've had a stocks to use ratio in the world outside of US and China that's been this tight. So this is kind of what I'm referring to when I'm saying that the safrinha crop in Brazil is going to be of utmost importance. Their stocks in Brazil are the tightest since about 2002 currently. So if there's any sort of issue here through April and May and any production decreases, it's just, that it's immediately going to be taken out of Brazilians' export estimation in my mind, because they have a feeding program of their own to keep up. So it really puts the U.S. in a good position of being, the world's largest owner of free stocks and free tradable stocks to be a supplier of corn to countries in need should this trend continue. Obviously, the elephant in the room that could shift this situation would be if we do see a further shift of acreage into corn, even above the 95 million acres that were estimated by the USDA last month. But that's a discussion for down the road. But for now, anyway, definitely a tight situation for corn when looking at the world in the grand scheme. Jumping to corn exports, as mentioned, the USDA did increase these this morning by 100 million bushels. This is actually, as of this morning, we had the latest export report from the Foreign Agricultural Service out this morning. So it's data as of a week ago, as of April 3rd. And as you can see, export commitments are totaled just under 2.2 billion bushels. That's between just under 1.5 billion bushels of shipments and 728 million bushels left of outstanding sales. Our commitment pace is running 25% above of last year's numbers as of this morning's report, and the USDA did increase their estimate from an 8% increase. Now they're expecting an 11% increase. So still a little bit of a gap there. And looking at this chart, you can see the green line is our current year, and the red line is the analog year, the record-setting export year. So as you can see, if you can kind of imagine that the trend of that line following a pattern similar to the blue line, which is our 5-year average, you can see we're probably going to remain slightly below that record export year. But that being said, it's not by a very, large degree. And we did have plenty of weeks back, looking back, February to September, where we were actually above the record-setting year. So all totaled, we're still in a very good spot. The argument can still, in my mind, be made that the USDA is still underestimating exports. But given where we are in the calendar year, obviously in a very important time period here in April and May to keep those shipments up, if we can keep the pace going, the USDA will obviously need to take another look at this through May and June. But for now, good to see at least some acknowledgement, but still a very impressive corn export pace, to say the least, through the marketing year thus far. Looking at ethanol, USDA left the ethanol estimate unchanged this morning, 5.5 billion bushels, expecting a 0.5 point increase. Total corn crush through February, the most recent data we have, came into 2.75 billion bushels, 1.3% above last year. So we are keeping a strong pace over what the USDA is expecting. It'll be interesting here to see how we perform. March is usually a strong month, as you can see by the dotted line is the forecast I've generated. But really the April-May months will be telling, because that's usually gets pretty predictable. It's usually a slowdown period for the ethanol industry, as many plants take some downtime for some maintenance while farmers are obviously in the field planting and aren't delivering corn to ethanol plants. So it'll be interesting to see how we shake out in those months. But for now, very impressive source of demand too. As always, very steady demand coming from the ethanol industry for corn. Looking at corn basis, we've seen a steady improvement here really since the roll from the, you can see looking back into the February months, we had a drop off there when the board rolled from the March to the May. It rolled pretty much at even money, and since then we've seen a very steady appreciation in basis. Since the last time we talked in March, it's about a 6-cent improvement in basis on a national average. So overall, still moving it within what you would expect here heading into the planting in early summer, where commercial traders are trying to get their hands on some corn here ahead of obviously when farmers are in the field and not delivering corn, and also into the summer months where you have obviously areas in the West where you just get into a deficit scenario. So it'll be interesting to see. We're starting slowly but surely to catch up with some of those other years there, right in the 25-cent under range. We're still quite a touch below, about a dime below the 5-year average pace. So will be very interesting to see, especially in conjunction with what the USDA is saying corn stocks are, if we do get into the summer months and need to have a pickup in basis, especially depending on what the futures do, to make sure we have cash corn moving to the places that need it here. So impressive basis action here through the spring anyway, and something to keep an eye on here as we move forward into the spring and summer. Lastly, for corn, just wanted to touch quickly on the commercial corn trader position. Since really the middle part of February, commercials have sold about 300,000 contracts of corn futures from that time. Really heavy liquidation in their positions, obviously, which sent the corn price from north of $5 down considerably through the latter part of February and into March. It is worth noting that in recent weeks, that pace of selling has slowed slightly. So it seems like commercials are trying to find an area of length that they're comfortable with. I would think, given today's numbers and just given some degree of uncertainty, that commercial traders, I would think, would still be interested in being long some degree of corn futures. But for now, several consecutive weeks, as you can see, of liquidation there, which has obviously kept a lid on these prices. The most recent data here is from April, their position out of April 1st. So since then, we've had a rally in prices. Basically, we're considerably higher on corn futures since then. So we're probably starting to see some length maybe even be built back into this. So that report comes out tomorrow. Will be interesting to see following, it'll be at that point as of the 8th, how we're sitting on commercial or non-commercial length in the corn market. Jumping to soybeans, USDA on soybeans today, somewhat surprising to the market. It was within expectations, but most analysts coming in were expecting pretty much an even ending stocks estimate compared to the March report. The USDA did reduce U.S. ending stocks of soybeans by 5 billion bushels. The things leading to this change were a 10 million bushel increase in crush demand, and then a 5 million bushel increase in imports actually reduced that effect or offset that effect by half. So the result was a 5 million bushel reduction to the bottom line. But a little surprised to see the crush numbers come in stronger. I've been thinking in recent days, especially, and we'll talk about it in more detail here in a few slides, but February was kind of a disappointing month for crush, even though the overall pace still remains at a record-setting pace. So I was a little surprised to see the timing of the USDA's increase here, but can definitely understand the argument, especially as we head into the summer months that are typically strong crush months for an increase there. So overall, not a lot of changes to the soybean side, but supportive, at least for now, to see that stocks number be drawn back slightly as opposed to raise. Looking at the world side, again, jumping straight down to the South American numbers, which are of interest. As you can see, the USDA, again, kicked that can down the road. At this point, Brazilian soybean harvest is more or less complete. So, the USDA at this point is pretty much confirming in my mind that we will have a record production of soybeans out of Brazil. The previous record is 162 million metric tons. So in my mind, it's going to be very hard to find 7 million metric tons of reduction from the April report on, especially with harvest done. If there was an issue, we'd know about it by now. The other notable change is the USDA actually went back to 2023-24, so last harvest, and actually raised Brazilian production slightly and adjusted some of their demand figures as well. Hence the almost just under 2 million metric ton increase in beginning stocks for Brazil. So that kind of dampens the picture a little bit. Almost equivalent of if they just raised this year's production by 2 million metric tons, which some analysts are still using numbers north of 170. But I'm interested to look more into the exact numbers that they found that led to that change. But for now, anyway, that added to the was basically the biggest change to add to the world less China soybean stocks, which you see in your upper right there, increased by just over 1 million metric ton when all the other adjustments were accounted for. And going down, you can see the big change there was in Brazilian ending stocks are expected to be a touch higher as a result of that increased beginning stocks, despite they are getting a touch increase in demand as well. Notably, crush demand was increased for both Argentina and Brazil, which makes sense when you think about that in relation to the growing and steady growth we're seeing in Brazil's biofuel industry as well. Looking at world soybean ending stocks, not including China, this chart has pretty much remained the same for most of the season. The stocks, 78.5 million metric tons, will be the second largest on record. behind the 2018-2019 year, which was obviously a year plagued by the first edition of the U.S.-China trade war. Also, strong crops from South America and the U.S. that year led to just an explosion in stocks. But we're seeing kind of a similar result this year to a little bit of a lesser degree. But overall, a stock building year undoubtedly in the soybean industry. China's ending stocks were unchanged this month at just under 44 million metric tons. But as you can see, that's also a steady growth, especially since the 2022 years. Once that China got out of their ASF outbreak and started rebuilding their hog herd with that, they started building up their soybean stocks as well, which has led to a far and away in the last 2 years record large amount of stocks that are being held in China currently. I wanted to give a little bit of a different look here. Usually in this slide, I look at the South American production estimates. I wanted to take a look at the stocks number just because I think it maybe gets some confusion sometimes of how the USDA does this. So when you're talking about South American soybean stocks in the WASDE, and in the context of the WASDE, it's actually annualized to match a U.S. type of crop year. So basically it runs October through September. So the numbers you see printed in the WASDE are actually what Brazil and Argentina and Paraguay's stocks will be as of October 1st. So I think it's important to keep this in context, especially when you start seeing estimates of how high of a stocks to use ratio Brazil has. Well, you got to remember that's by October 1st, and at that point Brazil still has almost 6 months until new crop soybeans. So they still have almost half of a crop year to go. So the USDA basically is just focusing in on Brazil, for example, estimating just under 1.2 billion bushels of soybeans to be on hand when the U.S. soybeans come available. So it is an increase from last year, but it's still down from what the case was in 2022 and 2023. And, I think there is some optimism to be found in this. I quickly ran the numbers yesterday, and by my math, Brazil needs about 800 million bushels or so just to support their crush industry from October through February. So that, in my mind, you're already down at that point to 300 million bushels that would be available for Brazil to export during that window. So it would not shock me, kind of like we saw this year, where Brazil exports of soybeans were very, very low in December, January, over that time period. I think it still sits the USDA or the U.S., in a very good situation to capitalize on that, and still kind of, in my mind, paints that the U.S. is still important and can't be overlooked in world soybeans, even with the obvious dominance of Brazil over the last decade and how much they've their production has taken off. So something to keep in mind, especially in combination with a low acreage number we got from the USDA last month as well on the soybean side of things. Soybean export pace, looking here, again, kind of an optimistic thing in my mind. As you can see, I've tried to highlight, we did see an early slowing in soybean export pace judged by the first left red arrow. My fear initially is that we would see another reduction at that second red arrow that's pointing down, but we really haven't. In fact, the book has pretty much ignored that and kept a very steady pace since that initial reduction back in January. So we've actually managed to gain some ground there. For now, the USDA kept their estimate unchanged at 1.825 billion bushels, but it is noteworthy that as of this morning's FAS report, we're still 14% above 2023-2024 in total soybean commitment. So there is arguably room for improvement there. USDA probably wanting to see how the whole thing shakes out. It's worth noting Brazil did set a monthly soybean export record in March as well, so that probably weighed in to the U.S.'s mind too, and in combination with obviously our shaky relationship with China as well. So looking into this, wanted to briefly touch on the tariff situation. This was actually even before the suspension of tariffs, and obviously the tariffs on China are even higher this morning than we thought. They're now at 145%. So probably going to get some retribution from China within the next hours, I would imagine there. So, but it is worth keeping in mind that, comparing this year's exports, which is the black line, to the analog year, which would be 2017-18, which was the previous trade war, you can see that it's not really expected this year to affect the old crop situation on exports. Where we'll get into trouble is if there is no resolution by late summer, and we start affecting next year's sales and shipments. That's where we'll really see the detriment of a trade dispute with China. But it's worth noting that at this point, and these numbers are slightly altered as of this morning, but they're fairly close. As of this morning, though, China only owns and purchases about 12% of our outstanding soybean sales. So the majority of that business has been done to this point. So even if China came in and canceled every bushel they have bought, it's really not. It would have an impact. I think I did the math this morning to be about 20 to 25 million bushels, but in the grand scheme of a 1.825 billion bushel book, not going to be a huge effect for this season yet. But again, that blue line is the worry. As you can see, the last export year, we came out of, into the new crop year after the tariffs were put in place, and we struggled the entire year. We didn't even come close to what you'd expect for a, compared to like a 5-year average. So something to keep an eye on, but worth to keep it in perspective here of how the tariffs will affect it, at least immediately in the soybean market. Looking at crush pace here, this is what I was mentioning, where crush was a little bit of a disappointing month for February, slightly below the 2023 or February 24. It was actually the first month that didn't set a monthly record here through the marketing season thus far. But February is always usually an unpredictable month just due to the shorter month in general. We usually see a recovery in March. So the degree of that recovery in March will really set the tone here through the balance of the marketing year. But overall, and I forgot to update that bottom line, the USDA is actually expecting 2.42 billion bushels of exports now, or of crush, 2.42 bushels of crush, billion bushels of crush. So overall, my projection based on this is coming in slightly lower than that, but again, that's going to be really dictated on how much of a recovery we can get out of Marches, which will kind of set the tone for the rest of the marketing year through the summer. Lastly, soybean basis has followed a similar path to corn, improved about 8 cents since the last time we talked in March. We're sitting right now nationally at about 58 cents under the May board. So it's quickly catching last year's, which makes sense given how close of a stock situation we're sitting at this year compared to last year. You'd expect a similar basis, and it'll slowly catching up to the green line, the 5-year average as well in terms of soybean basis. Lastly, on wheat, wheat did get some bearish adjustments to the U.S. balance sheet. Looks like about a 10 million bushel increase again in imports, probably as a result of the strong dollar we saw really up until recent weeks. And then we also saw another reduction in wheat exports, which makes sense given that pace had been kind of lagging as well. So it's 846 million bushels in terms of ending stocks. All totaled was a 25 million bushel, a 27 million bushel increase in ending stocks for wheat on the U.S. balance sheet. Looking to the world numbers, not a lot to report on the world side of things. The notable thing here is that the main stocks reduction was as a result of China, again, expected to import even less wheat than initially expected. They cut that another 3 million metric tons. as you can see, the stocks outside of China actually rose just under 3 million metric tons. So that was also as a result of an additional 1 million metric ton cut in Russia's exports, which could be argued are still overestimated by the USDA. There's a few private analysts that have even lower guesses than that for the season for Russia. So overall, pretty quiet on the world side, but maybe slightly bearish just in the increase in stocks we saw in the world outside of China. This just kind of reflects that stocks number outside of China, 4.91 billion bushels. As you can see, it's been mostly declining, over the past few years, but for the most part, very steady. Just under that 5 billion bushel mark seems to be the where these stocks end up kind of being, and it really has made getting any ground on wheat prices difficult in the world scenario. But at the same time, wheat is a unique crop in that the weather seems to really dictate more than most what's going to happen in prices. So in my mind, traders might be pretty quick to ignore this report and move on to the weather, where there are some issues still to be talked about in the U.S. as well as in the Black Sea areas with some dryness concerns. Wheat exports here, and I apologize again, the USDA estimate is actually reduced now to 820 million bushels of wheat exports. So we are running 13% above 2023, 2024 through this morning's report. And the USDA obviously cut back their estimate had been 18%, or calling for an 18% increase in wheat exports. They trimmed that back a bit in today's report to get closer to matching the current pace near that 13%. But as you can see, it's pretty steadily at a clip above the 4-year average. If you can kind of imagine that red line extending, you can see we're probably still going to, end up, if nothing changes, that would end up in the upper 700s to 800 range. So it'll be interesting to see, but the clock is definitely ticking. We only have less than 2 months now until the marketing year is over for wheat. So it might be kind of what it is at this point on the wheat side of things for exports. And lastly, on wheat, just wanted to discuss really quickly, as of last Friday's report, and this is data as of April 1st, non-commercial traders actually hit a record short position in futures contracts between Kansas City, Chicago, and Minneapolis futures. The timing of this is very interesting considering, especially considering the low acreage number, which is the second lowest since 1919, as estimated in March, if true, by the USDA. So that combined with some of the dryness and flooding issues across the U.S. Really, in my mind, makes this a bullish point to the wheat market, because if we've already seen some short covering over the last couple of weeks, but if traders should decide to bail out of these short positions, it's kind of the opposite of what you saw in the corn market. As they start covering these positions, it could have a potential to spur a price rally, especially in conjunction with any sort of weather event here as we move closer to new crop wheat here in the summer, and the weather going to take precedence of importance here through April and May, where there are, as mentioned, still some issues with dryness, especially in the southern plains area, and it looks dry over the next immediate week as well. So, and then there's a lot of talk about soft red in the east and what was flooded and what losses will be there as well. So definitely some bullish potential here should these traders decide to take some risk out of those positions and start covering some of those shorts. Wrapping it up here, I see the corn situation here leaving this WASDE report as being on the bullish side. The USDA finally raised U.S. export forecasts. Arguably, as we discussed, there's still room to go. And then overall, just a tight situation for world stocks puts a very high degree of pressure on Brazil to produce a safrinha crop. to keep their exports up. Otherwise, any production there is going to be felt in Brazil's ability to export corn, which in turn is directly bullish to the USDA and or the US, excuse me, and being able to capitalize on any production shortfall there. Soybeans, I see it as neutral, reduced somewhat on a surprising crush increase. The world situation still remains very well supplied, but obviously, as we discussed, as you get farther down the curve, it keeps me neutral rather than bearish. Just the fact that the demand for soybeans continues to be very impressive, mainly in the sense of crush. All of these countries, the U.S., Argentina, and Brazil, are increasing how much beans they're crushing as well as China is. So in my mind, you're going to need the supply here to fill those gaps here, and it might be enough to get through this year, but especially in conjunction with a low soybean acreage number. If we have an issue in the U.S. growing soybeans this summer, this thing could flip pretty quickly to where you're going to be considered underpriced where you're at right now if there's any kind of production slip there. So it keeps me neutral right now here, at least through the early weather here on the soybean side of things. And then wheat, I'm neutral as well. We did get a larger U.S. stocks number, and world stocks number, but to me, the old crop kind of is what it is at this point. I think traders are ready to maybe move on to the new crop situation. And whereas I said, wheat acreage, if accurate, as guessed by the USDA on March 31st, would be the second lowest total since 1919. So any kind of production issue there as well, whether it be, in the soft red areas from flooding or dryness in the hard red winter wheat areas, any slippage there, as well as there's definitely some dryness concerns in the Black Sea areas as well. Any slippage there could be felt in the market as a bullish situation. As we've talked about, world stocks they seem to be largely ignored anymore because the wheat situation is just kind of unique. That there's a lot of stocks, obviously, that never see international trade, and so that keeps me all things together. I think willing to call it neutral here on the wheat. You could make the argument for bearish just on today's numbers, but I'm kind of letting the weather as well influence my decision there. So, and then lastly, the next WASDE report to keep an eye on is on May 12th. That is a unique WASDE in that it gives us our first look from the USDA at the new crop balance sheets. So something to definitely keep in tune with and see if there's any early changes to the acreage estimates, and then also what they decide to put out for a yield number and demand and all that good stuff as well. So that's all I have for this time around. Thanks again for joining us, and we can get started with some questions. I know I went a little bit long, but we still got a little bit of time here. So
No, we got plenty of time for more questions. We've got one, Rhett, you kind of answered it, but you might want to go back to that part. It was on soybeans. The question is the percentage of U.S. beans that are exported to China and how much of that's happened already. You had a chart back there that kind of addressed that. You might want to.
yeah, I think it was this one.
There you go. Right, that one. Yeah, right. Yeah, in that.
Yeah. So, and I don't have if I remember right, it's something like we have like 170 million bushels of sales essentially. As you can see, the largest category is unknown. That 40% is unknown sales. It's safe to assume some of that is likely China. If you assumed 50% of that is China, which I think would be a fair assumption, the math I did yesterday put me at basically like 25 million bushels of sales outstanding to China. And that compares to, I believe it was 800 million bushels that we've shipped to China through the marketing year thus far. So you're really talking a drop in the pond. Most of the business to China is done at this point for this season. They were always going to move on to Brazil and buy Brazilian beans in March, especially with the size of the crop in Brazil. Although it should be said that it's been impressive that U.S. beans have kept up in being inexpensive right with Brazil. Brazil just barely has an edge in flat price. Obviously, the tariffs at this point make Brazilian beans a no-brainer. But it is an interesting scenario to say the least. But that's where I kind of see, is what I'm kind of referencing when I say I don't see it as being an issue for the old crop. Where we'll have issues is if we get into August and these tariffs are still at 145%, and China decides, well, we own 40 plus million metric tons of soybeans, we'll just draw from our state-owned stocks and we don't need to import from the US. That's where you see a situation like we had in 18-19, where US exports to China dropped about like 52% that year. And total exports, though it should be mentioned, only dropped about 20%, because the unfortunate side of that is if that happens, you're probably going to have a low soybean price in the US as a result of poor demand. But that also leads other buyers to your market. And that was the case in 2019. We saw a lot of soybeans go to places that they'd never really gone before. I think we even shipped soybeans to Iran that year, which that kind of says everything you need to know. I mean, that's like was kind of unheard of. But yeah, so I think it's kind of a double-edged sword, where obviously it'll hurt. China's obviously a very important customer for soybeans, but I also don't think it's really the doomsday scenario that some people do, especially with the emerging crush demand too, since the last time around can't be ignored either. So,
and weather always an issue on that too, as you talked about, and we're just beginning to see the crop progress reports come in, and obviously it's really early for that. There's not a lot of beans in the ground. There's corn in the ground, but not a lot of beans in the ground. But we'll be watching those crop progress reports to kind of see how that crop comes along, I suppose.
Yep, definitely. And yeah, we've done some studies here in-house. Mitch Miller, our contributing analyst for the Canada Grains, wrote a pretty good piece about a month ago on U.S. soybeans. And the bottom line is where these acres are estimated currently is, in my mind, it's starting to be very, very little room for error in the yield. Even if the U.S. were to produce a 50.7 bushel per acre and match last year's yield, most scenarios I've ran, considering what I think demand might be between crush and exports, it still results in a drawdown of stocks next year. So at least on the U.S. side of things, the world side obviously is its own whole deal. But yeah, I think when you actually start punching the numbers in, it starts to look more and more supportive of soybeans, especially given the low price we're currently at. It's starting to, I think, look like and I think that's why you've seen the bean price rally, like 50 cents in 4 days, is the market knows it needs to keep the price somewhat attractive to keep acreage even above the 83.5 million acres estimated on March 31st. So if they let the price slip too far, then producers will just throw their hands up on beans, and then we'll be in a really tight situation. So it'll be interesting, and to say the least, looking out here through 2025.
Yeah, good point. There's still plenty of time to ship the bean bags back and get a few more totes of corn if that was to be the case before the planters hit the ground. Well, I want to thank everybody for attending today. That's all the questions that we have coming in. A couple of things that I want to remind you of. Of course, this has been recorded, and you can pull this down at the dtn.com website. In about 2 days is usually when we have that ready. Those of you that are signed up will probably get emails reminding you that that's available. Our next webinar, as Rhett said, is May the 12th. That's the WASDE report. That is also the week of the hard red winter crop tour that goes on through Kansas, and they also dip down into Oklahoma a little bit and get some reports from Nebraska as well. We'll have our senior crop editor Jason Jenkins will be on that tour. We'll be reporting live from that tour. So first, literally, that Monday's report will be the first USDA look at the new crop, and throughout that week, we'll be giving you from the field reports on what that crop looks like through that week. So encourage you to pay attention to our sites during that particular period. And of course, we're also every Monday, we will have that crop progress report that usually comes to us about 3 o'clock Central Time. And we usually have something up about that, including some comments from Rhett and his team around the 3:30, 3:45 mark, usually for sure by then. So as we're watching how planting is going on and how these signals are and what we are planning out there, we'll be continuing to cover those reports as well. So I want to thank you for participating. Rhett, thanks again for all your hard thoughts and pulling all these numbers together for us. And want to continue to wish everybody a safe and productive spring. And we will talk to you in May. Thanks so much for joining.